guys. Hope you guys are well. Today we're going to be taking a look at Alphabet, or as many people know it, Google. So, being an internet-related company, Google hasn't been hit the hardest in these current times. I'm not going to mention any names for obvious reasons, but they haven't been doing the worst. They also are susceptible to changes in the small business and commercial environment, though, because almost 75-80% of their revenue comes from ads. And most of these ads, especially on Google search trends, are for local business or online e-commerce. So any sort of recession is usually bad news for digital marketing and advertising companies. Now, I just want to say right now, I am not a financial advisor. You should consult a licensed professional and do your own research before buying or selling any stock or ETF. This is just my opinions on the stock. So, it's been hit pretty badly by the lack of revenue going into ads right now. A lot of small businesses and e-commerce have cut their budgets for marketing, some by all the way up to 100%. So, Alphabet, they hinted at a slight drop-off at the end of Q1, which would have been the last week or two of March. They hinted that they were seeing a drop in advertising budgets, but I think that the effect on their earnings will be fully felt more at the end of Q2 when they release their Q2 earnings. So, for that reason, a lot of people are speculating that although Google has almost recovered from its pre-crash, or to its pre-crash levels, a lot of people are speculating that we'll see another dip once Q2 gets released, because their revenue is so reliant on this marketing and advertising budget. If we take a look at their revenue and profit, we can see that they are an extremely stellar company. A lot of people call them the company with the best balance sheet on the entire market. That's probably an exaggeration, but they're certainly up there in contention if that were an actual award. You can see their Q1 revenue dipped a little bit from $46 billion at the end of 2019 to $41.1 billion at the end of March of this year. So that's definitely likely to decrease even further once we have a full quarter of this slowed economic growth. It's still a gain year over year. They have an impeccable record when it comes to that. So this is still a gain year over year from the $39 billion that they earned or the $36 billion, that they earned in Q1 of 2019. But people are speculating that this next quarter will be even lower. This is probably going to be seen more apparent in their net income because their fixed costs won't decrease, but the variable income from their scalable advertising business will not be the same. Their shares outstanding hasn't really changed since 2014. If anything, it's on a very, very slight decline. billion in assets and about $69 billion in total liabilities. So that is incredible. That is a great debt-to-asset ratio. If we look at their cash on hand, we can see they're holding almost $117 billion of cash. That is insane. That's more than almost double their total liabilities right now. And they also have impeccable margins. Obviously, all of these are subject to change once Q2 earnings come out. But they have about a 20 to 21% operating margin usually, which is pretty good. It's not up there as high as a Visa or a MasterCard or McDonald's or Apple, but it's very good. Very, very good. So, for that reason, I think Google is a pretty solid company. I'm obviously not giving you advice to buy or invest in them. This is all my opinion. But they have a great track record. We'll go to a longer term chart here. You can see they've pretty much been on a steady incline since back in, I thought it was earlier than '04 that they launched. Maybe this is just when I assume this is just when they IPO'd. But you can see at one time they were $53 a share, and now they're a little under $1,500. That's crazy. That's 16 years, and in 16 years, you would have almost probably like 28, 27 timed your money. That's insane. Right now they're hovering at a $977 billion market cap, so they are on the verge of also, or I guess going back up to being a $1 trillion company. I guess they already were at one point, I believe, back pre-crash here. But we'll see what happens. I assume that they'll hit this peak at some point in the next week or two, if and only if the market keeps going back up as a whole. But I, like a lot of other people, I'm kind of speculating that we'll see another dip, probably nowhere near down to the March 23rd levels that a lot of these companies hit bottoms at. But we're speculating that we'll see a dip around the Q2 earnings season for a lot of these big companies. So, for that reason, I personally have purchased a little bit of Google. I bought around here just for a long-term hold. If it does end up dipping back down after the Q2 earnings release, that's wonderful. I'll probably pick up some more personally. Again, I'm not a financial advisor, but that is just what I am doing, just for the fun of sharing my experience and my decisions. So, hopefully you guys are looking at companies like these that, although they may be going through some hardship right now, they are likely going to bounce back hard, or just as hard as they were before the crash a year or two from now when this is all over. You should be thinking long term if you're trying to invest right now, because short term is rather uncertain. There's a lot of things that could move the market, and I think trying to play short term plays, especially right now where the market is so moved by news and social sentiment, I think it's a dangerous game that I wouldn't be playing. But hopefully you guys are doing alright right now, and I hope you enjoyed the video. If you have something else you want me to take a look at, leave a comment down below. Thank you guys for watching.